At this question 6, Wasim is a trader. His financial year ends on 31st March. The total of his trial balance on 31st March 2016 did not agree. The differences was a shortage on the debit side of the 495. This was entered in the suspend account. So suspend account, debit, it has a balance. Number one error, the total of a page of the purchases account, 3,842, has been carried forward as 3,824. So if we calculate the differences, the number one, the error, the differences is supposedly is 3842, but we under declare. So if we talk about the double entry, because we talk about the account entry, debit and credit entry. So we have to debit purchases and credit suspend. So this amount is 3842 minus 3824. So the amount is $18. Okay, the next is that a check received from DEC Limited 150 has been credited to the account of DDE Limited. So the number two error, a check received from DEC credited, this is a different person name. So check received means that bank received money, this is a customer. So customer wrongly credited to DDE. So we have to reverse DDE Limited and credit DEC Limited. 150, 150. And this error is an error of omission. Okay. Number 3, the balance of the petty cash book 100 has been omitted from the trial balance. The new double entry is this omission. We just need to go to the trial balance and put in. So petty cash should be in the debit side. So now we take out and we put in. Now here we have to reverse out the suspend. But this entry, we don't need to put petty cash. No need to put petty cash account. Okay. Only debit. Okay, so this debit side don't need to put, you just need to go to the trial balance, put in the petty cash. And initially suspend account debited, so now we have to reverse out this 100. So this a little bit difference compared to the normal entry that we put in. Okay, question 4. Repair to motor vehicle 283 has been debited to the motor vehicle account. So this repair is expenses, but we go and debit it to the motor vehicle account. We have to reverse motor vehicle account because this is a asset. So 283 and put back to the repair of motor vehicle. And the amount is just, and this error we call error of principle. Number 5, purchase of feature 2,200 on credit from office supply company has been debited to office supply company and credited to the feature account. So this feature is an asset. This is a supplier and debited to office supply and credited. By right should be debit, but now we go and credit. So we had to put back into the debit. But when we put back to the debit, this amount become double. Okay, this amount become double because 1 is to reverse the error, and then the second one is to put back correct. So there is a 2 entry double up, and credit office supply company. Okay, so double up the amount. Next is question 6. The total of the discount allowed column in the cash book 250 has been credited to the discount received account in the ledger. Discount received in the credit side, discount allowed in the debit side. But now this discount allowed omitted and discount received credited wrongly. So we had to debit the wrong account, discount received, reverse the wrong entry. This is to reverse wrong account. Second, we have to put the correct one, discount allowed. So discount allowed also in the debit is to put correct. So 2 entry but different account. So 250, 250. And this credit side will be double up in the suspend account. So suspend account will be double up 500. Next, question 7. The total of the analysis column of the stationery in the petty cash book 67 has not been transferred to the stationery account in the ledger. That means stationery account omitted. But petty cash book, no problem. So this is one side error. So we have to put into the suspend. Okay. So the amount is 67. 67. So now here they ask to prepare the suspend account. Start with the balance arising from the difference on the trial balance. The account should be balanced or total as necessary. So we put in the account. Okay, 6 column. Suspend. Date. Here. Amount. Okay. The beginning of the question saying that they have the debit side 495 shortage on the debit side, so suspend account in the debit side 495. Okay, so the account is on the date of 2016 March 31st. Balance. Okay, balance. And then we put in all the account from the trial balance that we have putting in here. The first one, purchases, and the amount is 18. And then number 3, this one is the petty cash, 100. So this is petty cash. And then we have these two, 6 and 7. So these two amount. So here, 250, 250. Okay. Next, stationery. Okay. So now we subtotal. Let's see the subtotal first. Okay, here is 600. Here is 4. So this one credit more than the debit. So we will still have a balance carry down. That means there are still error that we didn't discover in this question, which is we don't know what is that. So here, this amount will bring it to here. Okay, later on, I believe they will ask something about related to this. Okay, now next question. Let's see whether they ask anything. Okay, B, they ask prepare journal entry to correct 2 of the error which do not require correcting by means of the suspend account. Narrative are required. It means that we have to take this one. Okay, this is the error that we need to use, which is not required the suspend account. And then this one, error of principle. Okay, they ask to write the narrative. So here we have 1, 2, and then what else? One more here. This one more entry. Okay, this is error of complete. Okay, so this entry, because they say narrative are required, means you have to put the reason for it. So what is the reason for the number 2? Okay, the check. Okay, here we say, okay, correction of error DDE limited account wrongly credited. If you don't like this narrative, you can change something so long as the meaning similar, that is fine. Okay, question 4, the number 4 error, repair to motor vehicle has been debited to the motor vehicle account. So here you can say correction of error for repair of motor vehicle. Number 5, purchase of, okay, here we put correction of error for purchase feature wrongly credited. Okay, so now next is what else that we ask? Okay, number C. C, they ask for name the type of error made in the error 2. So here, this is the type of the error. Type of error. So this error will be error of commission. Okay, so this one is error of commission. Give me a minute, I call the guy. Okay, we continue. Okay. Wasim prepared draft financial statement for the year. Complete the following table by placing a tick in the correct column to indicate whether the profit for the year will be affected by each of the error. Okay, let's see. This one, I think, have to go up, beside the correction of the error. Indicate whether profit will be affected by each of the error. Okay, let's see. Go to site. So easier to is for this question D will be easier we do at the side here. Okay, so that we can see what is the impact on it. Okay, let me hide this one first. Okay. We look into the adjustment in here. The account that which is related, okay, account related to income statement, it will affect the profit. So which account is related to income statement? Purchases. This purchases account is under cost of sales, under income statement. Whereas these two is not related because this is under the current asset. Both also current asset. And suspend account is a temporary account. Repair of the motor vehicle. This is an expenses account. Motor vehicle is a non-current asset. Feature is a non-current asset. This one is current liability. Discount received, this is a other income. And this one is a expenses. Okay, stationery is a expenses. Suspend is a temporary account. Those the account that appear income statement item, income statement account, like example, cost of sales, this one expenses, this one cost of sales, expenses, and then other income, expenses. So these four entry, it will affect. Okay, this for your D, the question asked for the D, affecting this one, yes, okay, yes. And then this one also, yes. This one also, yes. Okay. If the question asking that the profit affecting before or after the adjustment, we have to be careful with the statement. This one, they just say whether affect or not affect. Okay. Okay. So this one affect the profit. But if the question asks whether the profit is overstate or understate, profit overstate or understate, it is talking about before adjustment of the error. This account is in the credit side. Before adjustment, purchases is under. So under purchases less, then profit should be increased. So profit for this one will be overstated. Whereas for this one, before adjustment, the repair account understated, expenses understated. expenses understated, profit will be overstated. Okay, because this one is purchases understated. So that's why here they overstate profit. Same to here. Here profit overstate because expenses understated. Come to these two. These two are originally in the credit side. So same, expenses understate, profit will be overstate. Whereas in here, income overstated, profit will be overstated. This one, profit overstated because expenses understated. So take note, this is before adjustment of the error. What is the impact on the profit? If the question asks, but this question didn't ask, this question only asks this one affect or not affect. So this few item affected. Whereas this one, no. Okay, this one also no. Okay, here, no. Okay, now let's continue. Consider this question. We have done already. Okay, after the class, you can try again. Next is that this question, but this is a paper 22, same May, June 2016. Okay, David is a trader. Okay, the total of his trial balance prepared on the date of 31st Jan did not balance. The differences was entered into the suspend account. Draft financial statement were prepared. The following information was extracted for the from this account. Cost of sales 59, and then gross profit is 15,000. Profit 3,005. Calculate the profit of percentage of profit for the year to revenue. So here we just take this amount, whatever we have, do the simple income statement. What is the income statement that we have? Start from the revenue. Okay, less cost of sales. Get the gross profit, and then we minus the expenses. This is simple account for the income statement. Profit for the year. Okay, based on the information that we have in this question, we put in the amount. Cost of sales, we have 59600. And gross profit is 15800. And profit for the year is 3500. So if we want to find the number for this one, we work backwards. So here, to get it, we have to take this plus this. So this is the revenue. To find the expenses, we take the gross profit minus the profit. So this is the expenses. Come to this one, they say calculate the percentage of profit for the year to revenue. So for the A, the percentage profit to revenue. So the formula will be taking the profit for the year divide revenue times 100%. So this is the working to find the answer for profit to revenue in percentage. Sometimes this one we call profit margin. Okay, so this profit margin we take profit for the year, which is 3500, divide revenue 75400 times 100%. So we get, follow the instruction. If they say 2 decimal, we get 2 decimal. Let's calculate. 3500 divide 75400 100%. So 4.64. 4.64%. Okay, the next one. Suggest two reasons why the percentage of the profit for the year to revenue lower than the previous year. This is for 2016. So 2016 is lower than the previous year. From the formula that we can see in here, we can try to talk about the revenue. The revenue that you can talk is quantity times the selling price. Okay, try to use the selling price for the answer number 2. When I come to the cost of sales also same thing, quantity times the purchase price. So try to use the purchase price to talk about it, the impact. Another is that talk about, because here I skip the other income, because most of the time company other income not so material compared to the revenue. So this one you can talk about the expenses control. So these 3 points we can use to answer in here. So number 1, if they say that is lower than the previous year, we talk about the selling price first. Selling price has decreased due to competition in the market, force David to reduce the selling price. So because of the competition in the market, so he has to reduce it. Number 2, the talk about the purchase price. Purchase price of the goods for sales has increased due to shortage of the product. This is just what you think makes sense, then you just put it, not necessary. Okay, must follow. Yeah, expenses, because this one lesser compare last year, this one lesser, they mean expenses has increased. So expenses has increased due to control by. So these 3 you can use 2 to put into here. If the question change it to higher than or better than previous year, your this sentence still can be used, but change the word. Change, like selling price increase, purchase price decrease, whereas expenses decrease due to better control. Just change a little bit. Just because this here is low, so I had to use the negative. Next, the following error were discovered. No record has been made of office expenses paid in cash. A page of total in the sales journal, 45,400, has been incorrectly carried forward as 44,500. Discount allowed 300 was incorrectly recorded as a discount received. Sales return 814 has been correctly recorded in the customer account but credited to the purchaser's return account. The provision for doubtful debt 120 should has been increased to 144. So see what they asked first. Okay, they asked to prepare journal entry to correct the error 1 and 2. Narrative are required. That means they want us to write the reason. Since that we are preparing, we prepare all the entry for it. Okay, number 1, no record has been made of office expenses paid by cash. So double entry, office expenses, credit cash. So this entry is a error of omission. Omission. Okay. Whereas number 2 error. Okay. Number 2 error is a page of the sales journal 45,000 has been incorrectly carried forward as 44,500. Sales is understate. Sales is in the credit side. Understate means we have to put back the amount. 45,400 minus 44500. So 900 understate. So here suspend. One side error. Number 3, discount allowed 300 was incorrectly recorded as a discount received. Discount received is in the credit side. Now wrongly put, so we reverse the error. Discount received and put back the correct account. Discount allowed. So go to the suspend account. Here is 300. 300. Here will be 600. Number 4, sales return 814 has been correctly recorded in the customer account but credited to the purchaser's return. So purchaser's return is in the credit side. Now we wrongly put into the purchaser's return account credited. So we have to put reverse the error. Purchaser's return, which is 814, reverse from the purchaser's return, and we have to put back the correct one, sales return. So this one, same situation. This one is to reverse wrong account. This one to put back correct account. And here, same amount, 814. So we have to go to same thing, suspend account. So double up the amount. This entry 3 and 4 are the same situation. One is wrong, one is correct. This one also same. Question 5. The provision of doubtful debt 120 should has been increased to. Increase to means that the differences only we take. So income statement, we increase to 144. This is a balance carried out. So we put provision for doubtful debt. And the amount is the increased amount. 144 minus 120. So here 24. So this is all the entry. Because this question says narrative are required, so the error 1 and 2 we put in the narrative. Okay. We put correction of error for of omission of office. Okay. Number 2, the error is okay. Sales correction of error for sales understated. Okay, now next okay, this one B we done already. Now the question C. Complete the following statement. Show the effect on the profit for the year of the correcting error 1 to 5. Okay, here, before we do this one, we look into all the journal entry have been made. Same thing is similar to the previous. What we got to do is see the impact account affecting the, we identify account that affecting the profit first. So those account affecting, which is, for example, this one, this is the expenses. So affecting, and then this is the income or revenue. Okay, revenue. This one forgot to put 900 here. And then this is the other income. This is expenses. And then this is under the cost of sales. Cost of sales. This is under the revenue. And then this one that we are looking at, okay, not this one. So this one is under expenses. Revenue and income statement in adjustment in the debit side is related to the expenses. Okay, now this one all identified, double check. Oh, okay. Now, what you need to take note is that this is all the journal entry that we have been made for all the correction. So when you see your correction is, let's put in here. If the adjustment made in debit side for revenue, income, cost of sales, or expenses, profit reduce, because debit side in the income statement is reduce the profit. So when we make the adjustment, this adjustment, like example here debit, here to debit, and then this also debit, and this one also debit. So basically this all reduce the profit. But if the adjustment, okay, wait, give me a minute. If the adjustment made in credit side for same thing, basically same for revenue or income or cost of sales or expenses, our profit will increase. So that this one is referred to this one. So this revenue will increase, then profit will increase. So now we go back to the question. So based on this one, you put in the adjustment entry. So profit for the year before correction. Here they put the two column, increase in profit, decrease in profit, this is the adjustment amount. Okay, the number one error to be all the item. Okay. So number one, they given already 114. We put it into here. So number two, we need to check our adjustment. So here, number two, this one is increased. So 900 is increased the profit after adjustment. So increase. Whereas error number three is decrease, which is these two amount plus together. And then error number four also decrease. So these two amount plus together. And then error number five also decrease the profit. So now we can sub the total. In the exam, in case they purposely gray this color, they put the gray color. You don't go and put in number into here. Okay. Take this minus your this one. When you get this negative trying to tell you your profit will decrease. Okay, so what we do, we take this amount minus this amount. So we get the revised profit. So corrected profit for the year. So this is our corrected profit, 2034. Okay, next move on. Let's see. Wait a minute. I need to double check whether they got say anything. Okay, here they say narrative. Okay, we could put the narrative. Fine. Okay, so for this number one section, in the this correction of the error, we done. Now we go to bank recon. Okay. Okay, this is only for the question that I picked from the 2016. Whatever question that I have, I just compile on it. Okay, now question 20, paper 23. Okay, question number one, they say that Jordan D is a trader who maintained a full set of account, including the 3-column cash book. So this is combine the cash book topic, the basic accounting topic, and the bank record. Her transaction for September 2016 include the following: cash sales 515, which 400 was paid directly into the bank. 10, a check received in August for 190 from C Bank was dishonored. Received check from H Magagula to settle her debt, less 2.5 cash discount. Paid 324 by check for new office equipment, 280, and repair to existing. That means this amount to the same supplier, and these two amount for different purpose. One is an asset, one is expenses. Next, pay all the cash into the bank except 50. This except 50 means that balance carried out remain 50. The rest all transfer contra to bank account. Now, cash book. Okay, we open the cash book account first. Okay, they have the date. the detail, discount, out, and then cash, bank. The next one, okay, the dollar sign first. Okay, the next column, the credit side. Here, discount allowed. This side will be discount received. Okay, put in the opening first. September 2016. September 1st. Balance. Now, cash 193. And for the bank, we have the overdraft. And the amount is 15960. Okay, this is a cash book. So we copy up first so that easier with the information that we have. Yeah, I drag this one down first. Okay. How come so difficult to drag? Yeah, let me put back first. I copy this information up. Easier for me to check. Now, one by one, we look into it. September 5th, cash sales. This is cash sales. Sales. They say that 400 pay directly into the bank. So bank account 400. The balance keep as a cash. So minus 400. So this is the cash. This is the bank. 10, a check received from this one, this owner. So we have to transfer out in here. So this amount is on 10, which is received from C bank. Okay, this amount is 190. So here you can put this. Okay. So the third entry, 15 receive a check. 15 receive a check from H Magabula, and the amount is for to settle her debt of 480 and get 2.5%. So we take 480 times 2.5%. This is the discount. Whereas the bank amount received is 468. Next is pay 324 by check for new office equipment. So this one is 21st. And this one we pay for the office equipment and also office equipment. So the amount is 280 and 44. 280 and 44. So this is the account that we use. And then next is pay all the cash into the bank except 50. So 28. Here is we call contra entry. Bank receive how much we don't know, but we calculate the cash first. So 28 transfer to the bank under the contra entry, and here balance carry down. So this balance carry down is the last day of the 30th, and they say 50% cap. So this one is the $50 cap. So to find, okay, let's continue. Okay, in order to find how much of it, we get the subtotal for this one first. Okay, subtotal is 308. So that means we have to take this subtotal minus this 50. So we get this amount. So bank account, cash account, settle this amount, transfer into here. This is the contra entry. So from all this, now we start to calculate the balances. Okay, this is 12. This is 0. No need to put because got nothing in the credit side. Whereas in here, total debit 11. But here, total debt is how much? 20. So this one credit more than this debit. So in this case, our this balance carry down for the bank still in the credit side. So minus. So this amount transfer into here. Become October 1st balance down 948. And then this 50 transfer into here. Okay, so we settle the cash flow account first. Okay, now let me take it to the down there. Okay, so now settle. Okay, we move on to the next. See what are the question they ask first. Here B, they say state why it is not possible for Jolindi to have a credit balance in the cash column of her cash book. So for the cash account, we cannot have the credit balance because it's impossible we can take more than the actual cash in hand that we have. So that is the reason why it's impossible for her to have it. It is impossible to take more actual cash in hand to take up, okay, yeah, to take more or spend more actual cash in hand. Okay, so that is the reason it's impossible it have in the credit side. Jolindi decide to compare the bank column of her cash book with her bank statement and to prepare a bank reconciliation statement. State 2 reasons for preparing a bank reconciliation statement. What is a bank reconciliation statement? Before we do this, we just do some revision. Bank account. In the bank reconciliation topic, you learn the bank account, you learn bank statement account, bank statement, you learn bank reconciliation statement. So these three terms that we have it. So bank account actually is the record done by the business to record all the transaction made Whereas bank statement, a statement sent by the bank to its customer show monthly transaction recorded by the bank, not by the business, by the bank. Okay, the purpose of, okay, how come? Yeah. Okay. Okay. The purpose of it is to check the record, or to check the record done by the bank and the business. Okay, that is the purpose that they want to send out, and also for the business to check or to reconcile so that the business has accurate bank balance, and also for in case there is error by the bank, update the banker if any error made by the bank. Okay. Bank reconciliation statement. A statement prepared by the business after a statement prepared by the business to reconcile the bank account and bank statement. Okay. So this is the bank reconciliation statement is prepared by the business to reconcile the bank account and the bank statement. Okay, here, state 2 reason to prepare a bank reconciliation statement. So here, this information and this information, basically we can use it. Okay, for number 1, to check any error by the business or the bank. Okay, to check any error by the business, the business or bank can do necessary adjustment on cash book or bank statement. So this is for both parties to find an error and adjust accordingly. So this is one of the reason. Second reason is when we have bank reconciliation statement for the business will latest update on or more accurate bank balance or statement of financial. So this one, he can prepare the more accurate financial statement for the bank account. Okay, now let's continue. Suggest 2 items which may appear in the cash book but not on the bank statement. Okay, so this one, 2 items may appear in the cash book but not on the bank statement. Okay, I put the both side as just for exercise purpose. So this, to answer this question first, item appear in cash book but not in not on the bank statement. Whereas another one is item appear in bank statement but not on the cash book. So just in case the question turn to this one. So the item appear in cash book but not on the bank statement. We can put unpresented check. Unpresented check is the this unpresented check is the check issued by the business supplier yet to pay by the there is a unpresented check. Uncredited amount or uncredited check. This is the check or amount put into bank account by the business but bank has not clear the amount into the business bank account. Understand what is the differences for this one and this one? Take notes about the differences. One is that this one is the business payout. This one is a business receive and go to bank, put into it, but yet the bank pay into their account. Okay, in this I add some word to supplier. Okay. Other than that, they could be also which is appear in the cash book but not on the bank statement when there is an error by cash book, because this is done by so bank will not do the recording. Whereas in here, the item appear in bank statement but not in the cash book. Normally for those online credit transfer, all this one, credit transfer, and what else? Credit transfer, standing order, and then direct debit. Okay, so this one, what else the possible? Credit transfer, standing order, direct debit. Okay, so this all can be happen, and then what else? Bank charge. Okay. So any of you that not clear what is called credit transfer, standing order, direct debit, the bank service that provide by the bank to the customer. Any one of you not clear about this one? This one. Any one of you need further explain? Any one of you? If don't have, then I move on. Okay, let me see message first. So means that you understand what is called credit transfer, standing order, direct debit. Elisa? Yes. Okay. Now in this case, I put it into here so that in future you can refer back. Okay. Credit transfer. This one is that the customer instructed his bank to pay the business. So this one is that the business receive money. Okay, that is called credit transfer. Whereas standing order, normally is when we are having the fixed, when we have the fixed instruction instruction to the bank for the fixed amount and fixed date of payment made to supplier. So this type of expenses are normally suitable for, like example, the rental. Because rental normally when we incur rental, the rental is a fixed amount. So this one suitable when we have the rental. So rental every month, we just get the bank to do auto deduction from our account and then give to the owner for the rental. So this one is one of the quite often happen in the business. Okay, the next one is that direct debit. Okay. Direct debit also instruction to the bank, but the instruction is we give to the supplier. Okay, give instruction to the supplier for the payment. Okay, for payment deducted business bank account based on actual usage. This one very often we use for the mobile phone charge, the bill, all this type of thing, electric bill. Now almost of it people using this also. You can just deduct from my account. So long as once the like the mobile phone company, Digi or Maxis, or they get the bill out, they will inform you through the message, and then after that, few days later, you will receive another message saying that this amount has been paid, and you go and check your bank account will deduct it according to the usage. This one is based on the usage, because sometimes you use more, sometimes you use less. Whereas this one, everything fixed. Your rental are the fixed, your amount also the fixed. So that basically you can base on the date that you agree with the owner to pay it out. There is a cost standing order. This is called direct debit based on the usage. So there is differences for this okay, these three items. Okay, next move on. So but for this question is referred to these two. This one for your this one. These three. Okay, this is for your this answer. Okay, for this D. Okay, next move on. Okay. Here they say Jolene believe that her working capital could be improved. What is the working capital? Working capital is a current asset minus current. When the question changed to working capital ratio, be careful. This one is current asset to current liability. This is in ratio format. Okay. Whereas this one is the answer in dollar. So take note the differences. Don't get wrong info. Okay, now next. State whether each of the following. The question for this one is talking about this working capital, not this one. State whether each of the following course of action will increase, decrease, or have no effect on the working capital. Where we see all this, number one, they give a reduce credit sales and increase the cash sales, no effect. Why is the reason? Because trade receivable decrease and cash increase. So total current asset is unchanged, no effect on the current liability. For the number two, okay, here, I put into here. Number two is credit. Okay. When we credit the provision for when we create the provision for doubtful debt, the double entry will be debit income statement. Okay. And then credit provision for doubtful debt. This credit, okay, credit provision for doubtful debt, you will affect the reduce the trade payable and trade receivable. Reduce trade receivable, what happened to your current asset? Current asset decrease. So when current asset decrease, capital decrease. So your this answer for for this one creation, it will cause that the working capital decrease. Okay. Here the reason is because of this one. Okay. So you put trade receivable decrease and current asset decrease. And then no effect on current liability. Okay. Number three, take a long-term bank loan. So the double entry that we have, debit, bank, credit, bank loan. And this bank loan is a non-current liability, whereas this bank is a current asset. So debit bank increase. So this working capital will increase. Why cause the increase? Because of this debit bank. Okay, this debit bank increase and current asset increase. So working capital increase. No effect on current liability. Okay. Whereas in here they say take a short-term bank loan. This short-term bank loan is referred to the current liability. This one increase, this one also increase. Both increase. Working capital, no effect. Or see how they put in, they say, okay, they say no effect, then we would put no effect. Why there's no effect? Because bank increase and current asset increase. But at the same time, bank loan is short term, so that current liability increase. Okay, so both increase, working capital, no effect. Okay, now let's continue. Okay, next is pay credit supplier earlier to earn the cash discount. So this cash discount is discount received. Okay. Discount received is a income. Other. So put the debit and credit. Okay. Debit supplier, which is a trade payable. Let's put in the amount. Here pay 1,000. Okay. And bank credit bank 950. And then credit again. Discount received 50. So now we notice that our decrease in the liability. This is a current liability. This is a current asset. So working capital, what happened? This one, working capital will be increased. The reason is, let me put in the increases. Bank decrease less than trade payable decrease. So that's current asset decrease less than current liability decrease. So that working capital increase. Okay, so this is the information that we can use for this question. Okay, now next. we were going to do the next one is, okay, control account. Okay, we go to do the control account. Okay, so this one is October, November paper 22. Let's see. Question number 1. Okay, let's see what they ask. So this is combining the basic topic. The basic topic pool of prime entry. Okay, Amira financial year end on 30th September. She buy and sell on both cash and credit term and maintain a full set of accounting record. Control account are prepared at the end of each month. Name the book of prime entry which Amira will use to obtain the following information when preparing her sales ledger control account. Okay, if somebody has not really understand sales ledger control account, then give me a minute. I need to find the format for you all to remember. Give me a minute. Okay, for this topic, the two accounts that you must memorize. So one is a sales ledger control account. Another one is purchases ledger control account. So these two accounts, you have to know the position first before we talk about this one. Okay. Sales ledger control account. This is the asset which is most of the time in our account we call trade receivable. This is the total trade receivable. Asset, because this is a current asset. Asset balance brought down normally in the debit side. If you see the credit side, this is some or one or two customer become our supplier. If we are owing them, maybe due to the return or any reason they return to us, then we are owing money to them. And credit sales, this must be the credit sales only. Cannot include the cash sales. If the check they paid, when they pay the check, the customer paid, we put here credit side. Pay cash, put into the credit side. Discount allowed always together with the bank and the cash. Discount allowed is expenses to the business. But when the check cannot be cleared by the bank, this is dishonor check, then we will debit back sales ledger control account and credit the bank. If there's a customer late for payment, we charge them the interest. This interest to the business is an income. Okay, this is the income to the business. When the sales have returned by the customer, we have the sales return in the credit side. Irrecoverable debt is in the credit side because this is expenses. Contra means that one of the customer in here also our supplier. So we net off each other account, and this amount that we net off always take the smaller amount to net off each other. Carry down, if you have both account, balance carry down, debit and credit, this amount must be bigger than this one because this is a liability, this is the asset. No provision for the doubtful debt in here. Okay, come to purchases ledger. Purchases ledger control account is opposite to the sales ledger control account. Balance brought down, credit side because this is a current liability because trade payable. If we have the small amount in here, means that We could be have the new supplier, we had to pay the down payment, pay the deposit for it. This is referred to the credit purchases, no cash purchases. If we late pay to the supplier, interest charge, this is our expenses. Purchases here, purchases return will be in here, debit side. Cash, this is means we pay the supplier. Discount received is our other income to be recorded. Contra is opposite. Okay, this amount will reduce this. Balance carry down, this is big amount, this is small amount. So you notice that what we have to do for it is that basically these two accounts are opposite each other, because this is the liability, this is the asset. This is a customer, this is a supplier. Okay, now let's move on. Come to the book of the recording. In here, this is the account to be recorded, but come to the book, which is the book of prime entry or journal. This is a journal. Credit sales, where we get it from? From our sales journal. Bank, from our cash book. Interest charge, from the general journal. Bank, these three basically from the cash book. Sales return, from the sales return journal. Bad debt normally is from the general journal. This contra also from the general journal. That is called book of prime entry, or the first source recording where we get it from. Okay. Purchases ledger control account. The book of prime entry. Here from the purchases journal. This one from the general journal. Here, purchases return journal. Cash book. This one from the general journal. So this is the source of document where we gather from. So now go back to the question. Okay, for this question, the first one, they say that name the book of prime entry which Amira will use to obtain the following information when preparing the sales ledger control account. So let me find a space. Okay. The first one, check refund to credit customer. The moment you saw the word check, okay, the check must be the bank. Okay, check is, check is referred to the, okay, so here bank is under the cash. This amount, book of prime entry, is cash book. Okay, the number two, bad debt written off. Bad debt written off is not every time happen. Is so-called not consistent entry. So this type of entry normally we use general journal. Return by credit customer. Customer return to us. So this is a sales return journal. Interest charge. Interest charge on customer overdue. This one is customer will be general journal. Okay. So this is the answer for the A. Okay. So for the B, State 2 reason why Amira prepared a purchases ledger control account. Be careful. Here they talk about sales ledger control, but in here they talk about the purchases ledger control. So some of the point can be used, some of the point you be careful when you want to answer on it. Okay. For example, number 1, because this is talking about purchases ledger control account. This is related, this one is related to the supplier. Okay. The purpose of preparing control account is to check error, to check any error in purchases ledger and sales and the purchases ledger control account. So this is to check the error. One of the purpose of it, but here I'm using purchases ledger because they are asking purchases ledger control account. Other than that, it will help us to prepare, easier to prepare financial statement. Okay, with the, if the total correct, then we straight away can take it. And okay, now is to check any error in, okay, to detect the frauds if the purchases ledger and purchases ledger control account difference due to two different two different person prepare the account. Okay, so this is one of the reason that we prepare the control account. Now next is, here we have debit purchases, credit purchases ledger, and here some of the information are irrelevant to our preparation. They ask for the purchases ledger control account. In here just now, the slide that I shared, some of the information not relevant. And they try to confuse us when they given us all of these items. So they want us to choose which one should be related to the purchases ledger control account. So we prepare the purchases ledger control account. Purchases ledger control account. Date, detail, and amount. Okay. 2016. Here they have the debit balance. September 1st, balance brought down. Okay, and the amount is 93. And in the credit side, okay, wait, let me adjust a bit. Okay, 4210. And September 30th, credit purchases. So the position of the account try to memorize about it. If still cannot, I also can't. Okay. Credit purchases, the double entry is with debit purchases, so automatically we will credit the supplier. So this is a supplier. So we put purchases 5366. And take note that this is only taking the credit purchases. Don't take the cash purchases. They're trying to confuse you. Okay, another check paid to credit supplier. Supplier received the money. So supplier debit side. So this one check means bank account. Okay, bank account 3705. And then next, check received from credit customer. This one trying to confuse you. This is should be under the sales ledger control account, but they didn't ask for sales ledger. Don't take this amount. Okay, only take supplier. Discount, they have two discount, also trying to confuse you. So this supplier is a discount received. So the type of the account putting into which one, then you have to be careful. So this one 95. Okay, the next one. Okay, one more thing that I observed that's quite easier happen in the exam is the students see wrongly the amount. They know the account, debit and credit, but they take the wrong amount because sometimes too many row you get confused. So what I would suggest is that sometimes you use your ruler. Okay, you put every three item, draw the line, so at least you can see it clearly which amount to which amount. Okay, so that you won't do something that mistake that not necessary. Okay, next return to the credit supplier. Here is a credit purchases. So here return will be purchases. So purchases return is 197. Interest charged by supplier. This one is overdue. So interest charge. So supplier charge, that means it's our expenses. So 12. Next, check refund received from the credit supplier. Check cash refund received from credit. That means supplier pay the money to us. So this cash we receive, because cash refund received, this is money that we receive from supplier. Receive the cash, 150. Contra entry. Contra entry always in the debit side because they reduce the balance brought down in the credit. So this is the sales ledger control account, contra entry, and the amount 494. And here they put debit balance. This debit balance is referred to the carry down because the date in here, is October 1st. So here, carry down, which is 68. And then this amount, they put question mark. They want us to find ourselves. We have to find this amount. This is a balance figure that we need to find. If we put correct debit credit, then we can get the answer. If we accidentally put the wrong side or whatever, then it will not. But don't worry, because maybe you just lost 2 mark audit, or depending how many that you get correct. So take this credit because it's more, minus all the debit side. Okay, here October 1st balance breakdown. So one debit, one must be credit. Here don't forget, also had to put, because they have two sides. Because normally the mark is given in here. So this settle. Okay. Now next move on. Select the relevant figure. No, this one done already. Okay, now next. Suggest one advantage of paying credit supplier before the due date. Okay, here is standing from the business point of view. We talk about it. Okay, benefit. This one from business point of view. Sometimes question will ask from the supplier point of view. Okay, so from the business point of view, number one is the business can get cash discount. Okay, so this cash discount will increase the profit for the year, because this is a discount received. Okay, get the cash discount, and then because you pay people earlier, relationship will be good. Relationship with supplier is good. Then what we will get, the supplier is willing to supply the business as per business request. So whenever you need, they come to you, serve you nicely. Okay, come to the other. Sometimes the question asks from the benefit, and this benefit is from the supplier point. So be careful, it's not talking from the business, talking from the supplier point of view. What is the benefit for the supplier point, from supplier point of view? Supplier will have the reduce the risk of irrecoverable. Okay, and improve Okay, let's continue. Okay, reduce the risk of irrecoverable debt and improve the cash flow of the business. Okay, so there is the benefit to the supplier. Okay, next is E. Suggest one disadvantage. Okay, one disadvantage of paying credit supplier before the due date. So this one is disadvantage from the business point of view. So here, disadvantage. We pay people earlier, they may be short of the cash. So what we can do, we cannot use it for other purpose. The business may short of cash flow to pay other expenses. So there is a problem he might have. And other than that, number 2, the business cannot use its extra cash flow for other investment purpose, such as put into short-term deposit to earn interest. To earn interest. Okay, so this is a disadvantage for the business. How about disadvantage from the supplier point of view? So supplier point of view is supplier have to give the supplier have to give cash discount and reduce its profit for the year. So because this is expenses to the supplier. Okay, anything else to ask? So this is all the section 3, the topic for section 3 for the topic correction of error, bank records, control account. This all from the 2016. You can get this all the question from the 2016 paper. Later on, I will share this recording to all of you. Okay, you all try it using your own paper. Try it out, and not sure, refer back to the recording again. Okay. Any question?